Hey, Phil Aitken here. We're going to show you the market stats for October 2024. So let's take a look. So this is nefar.com. You can go to nefar.com, click on the resources tab, and you'll get this information. So we've got single family homes in Duval County, which is Jacksonville. Jacksonville is Duval County. $337,000 is the median sales price. A year ago in October was 318. We're at 337, but the prices have been relatively flat over time. It says that we're up 6% from October of last year, which is true, but it's been relatively flat, 1% over the previous month of September. 770 closed sales. This is down 4% from the previous year, and you can see in March we were at basically 1,000, and it's been a downward trend to 770. Medium days on market is 45. We were as low as 22 days, and it's doubled in the last 6 months. And then the housing affordability is up 3.9, but it's been all over the map. We've been as high as 82 this year and as low as 79. What this is your monthly payment. What does it cost to purchase a house today versus what it did 3 years ago when interest rates were lower? This was 120 3 years ago. It's down to about 79 because the monthly payments are significantly higher. The number of pending sales, the houses that went under contract, is down 25% from the previous year in October. So you're seeing a downward trend. There's a lot of reasons for that, but interest rates being up, the election, and a few other factors, and prices are still a bit high. They're starting to come down a little bit. You're going to see pending sales rise in 2025 as interest rates come down. And new listings, there's new homes on the market, 1645. A year ago, it was 1,100, and it's 1645. So higher number of higher number of listings, more competition for sellers. It's better for buyers. They have more choices these days. And then the active inventory of 3,800 a year ago was 1,900. So it's almost double the number of houses on the market. It's up 93%. So again, the more houses on the market, higher interest rates puts more pressure on pricing for potential buyers. And month supply of inventory means if we stop taking on new listings, it would take us 4.9 months based upon the current month's sales. So let's take a look at drill down a little bit closer. I'm going to overlay active inventory and number of home sales. So here you have number of listings. The blue is the active listings, and the yellow would be the sold listings, and then the red would be the new listings. So here you have 1,078 sold homes, and there was 4,942 active listings. So what that tells you is that 1 out of every 5 houses, or 20% of the houses that are on the market, are selling right now. We haven't seen that kind of number since the Great Recession. So 1 out of every 5 houses are selling right now. So sellers have to get more competitive on their condition, their pricing, and their marketing are 3 critical things that have to happen for sellers to compete in this market. If you look at the listing prices, the blue is active, red is the medium list price, and then yellow is the sold. You see a downward trend on pricing, whether they be active or sold pricing. The trend is downward. Again, interest rates being up, inventory being up, it's putting pressure on pricing, and sellers have to compete better. There's fewer buyers in the market as well. The absorption rate, this is number of months, 4.19 months it would take to sell all the inventory if we didn't take on a new home. And then the sold to list price ratio is showing you the competitiveness of the market. It was back in April, it was 95 points, call it 96% of was the list price to sale price ratio, meaning that if a house was listed for $100,000, it would sell for $95,700. Today in October, it is actually 93.6. So if a home sold for was listed for $100,000 when it went under contract, you're going to get $93,000 for it. Days on market continues to rise since the midsummer. We're up to 62 days on market, and this chart is a little bit more dynamic, a little bit more active. The October was almost a month ago, so the October stats. This is a little bit more accurate. And so if you look at the average sales price for this month was 389. Last year was 375. So it's up 3.8%. And then so let's take a look at closer the existing home sales. This is the national existing home sales. You can see the trend from February to present. There's been less houses every single month that are being sold. Again, for those reasons that I mentioned earlier. This talks about Jacksonville specifically, and this is the medium listing price for Jacksonville, Florida. And we peaked out at around $400,000 or $439,000. And currently we're at, for October, $397,000. So there's a downward pressure on pricing, and this is where the average prices were in 2018. You see 324 and 359, 440. So we peaked out in July of 22, and then it's starting to come down slightly. And another reason for that is interest rates. When the Fed lowered rates on September 17th, those Fed rates are basically for car loans and for business loans, and they lowered interest rates half a point. But the bond market didn't like the inflation numbers, and so the bond market is how mortgage rates are calculated. So mortgage rates have gone up from low sixes to the mid to high sixes. They've gone up about 0.6 of a point since the Fed lowered rates. Another factor when you're talking about housing is affordability, and that has to do with unemployment as well. So you're seeing that, this is the Great Recession right here, and then we had COVID right here, spikes, and the unemployment came down from the 11% around COVID, and it bottomed out in Jacksonville at 2.5%. And it's ticked back up into the mid threes, 3.6, 3.8%. So I think where you're, as far as the forecast for, I think you're going to see price improvements in homes because of higher interest rates and higher inventory and less buyers in the market. But in 25, as interest rates come down, the affordability will go up. For every 1 point that interest rates drop on mortgage rates, it'll increase the buyer's purchasing power by 10%. So if rates go from 6.5 to 5.5, let's say, then a buyer who is pre-approved for 400 can now afford 440. So as interest rates come down, it'll increase the opportunity for more buyers to increase their purchase price, which will help stabilize prices as well as sell more homes. So I hope you enjoyed this month's October of 2024 market stats. And if we can ever help you with buy, selling, or investing in real estate, we'd love to be able to do so. Thanks so much for watching. Take care.